I think this is just a temporary blip. I don't think that the problems overseas, the things that are going on now in the Ukraine with Russia, will have any long-term impact on the American economy. So we're still very, very bullish. Exactly. And we always think it's great when you can get these kind of declines that you think are not long-term problems. You can really take advantage of the bargains and the dislocations to buy good companies.
Global markets are at risk from what's going on in the Ukraine, because we saw this in January where there was turmoil in Turkey and it hit investor confidence. And we've had a stellar February, so investors are going to be looking to lock in profits. In terms of where traders are positioning, we've seen a lot of buying of the VIX options, showing that traders are actually betting in volatility to actually be rising, and the price has reached a 6-year high. But there are three issues that a lot of people are actually missing. So first of all, in the Ukraine, the bigger risk is actually that the Ukraine reaches bankruptcy and has to reach out for a bailout. So there's a lot more turmoil that we could see politically and domestically. And for Russia, there could be a substantial hit to growth. And the reason for that is that, again, because confidence is shaken there.
You're exactly right. The data is just really hard to interpret right now. You have the weather impact, which hopefully is starting to be a diminished role in the data as the weather conditions improve across the country. And then you have this inventory cycle. We ended the end of last year with abnormally high inventories. That needs to be worked down, which can weigh on production as well. So our view is we're experiencing a period of some short-term softness in the data flow, and we do expect that to bounce higher in the coming months. We're still optimistic for growth this year. You know, it's funny, I did the same exact thing. I looked through the components, and it was either a weather story or really optimistic, strong commentary. So I'm glad you pointed that out. And I think that's right. There is probably some good news to glean from this, which is despite the fact that you had some drag due to the weather, production still picked up, new orders still improved. And that shows that perhaps we're starting to see improving demand. Durable goods orders were better in terms of core capital goods. So I think we feel comfortable with our view that this is short-term weakness, and we're going to see stronger demand ahead.
I think the stock can go much higher as people begin to realize that Ford is getting more aggressive in Asia. They'll have 10 plants there, catching up to GM and getting more competitive. I think the stock is a winner here in the mid-teens, and I think it's got more potential upside than GM, although both could work.
Today we got data, and actually GM gained 2 percentage points of market share from Ford in the month, and they did not have to incentivize nearly what people were nervous about that they would have to do. And
okay, that's great.
Say that 2014, they have a whole new set of products that are coming out. They're behind Ford, no doubt, in the restructuring. But in the product platform, Ford has problems. That's why they lowered guidance back in December, because their costs are going up because they have to now talk about new launch costs.
The people are going to have to settle.
Products, I think new products
okay, that's
are very
great. We don't
for
disagree.